She had 6 months, 3 kids, no backup income, and one hard deadline. Most people in that position panic. She made a spreadsheet. The email used the word restructuring, which is the corporate way of saying the decision was already made before anyone told her. Maya read it once at the kitchen table after she'd gotten all 3 kids down, and then she read it again, slower, looking for the part where it got better. It didn't. 6 months' notice, which sounded generous until she reached the line about benefits terminating with employment, income and insurance, gone in the same sentence on the same day. She set her phone face down on the table and sat with the specific cold of that for a minute. Then she opened a new tab and started doing the math. She pulled out a yellow legal pad, the same one she used for grocery lists and permission slips, and wrote the numbers down in 2 columns, income and outgo, the way her father had taught her when she was 16. The part-time check was $1,100 a month. Not much on paper, but it was the number that made the other numbers possible. Health insurance for 5 people on an employer plan ran about $210 a month in payroll deduction. But she knew from a friend who'd lost a job the year before that the open market was a different calculation entirely. She pulled up healthcare.gov on her phone and typed in their zip code and household size and stared at the estimates. The cheapest plan that covered what her family actually needed was $680 a month. She wrote that number down and circled it twice. The deficit wasn't theoretical anymore. It was $1,070 a month, and it had a deadline. Her husband Marcus worked in facilities management for the county. Steady work, good man, not the kind of job you get rich from, but the kind you're grateful for when everything else moves. His salary covered rent and groceries and the car payment, and in a normal month that was enough because her check filled the gap. But a second insurance premium at $680 a month was not a gap. It was a wall. She thought about asking him to pick up overtime, and then she thought about what that would actually look like. The kids, the school runs, the nights he already came home tired. She didn't ask. She looked at her phone calculator one more time and accepted something that took less than a minute to understand but would take 6 months to answer. This was hers to solve. The first instinct was the obvious one. Update the resume, call the recruiter she'd worked with 3 years ago, apply for the marketing coordinator role she'd seen posted at an agency 2 towns over. She even drafted the cover letter. 3 paragraphs. Professional, honest. And then she did the math she'd been avoiding. Full-time childcare for 3 kids in their city ran between $2,800 and $3,400 a month, depending on hours. A marketing coordinator salary in that market was $42,000 to $48,000 gross. Call it $3,200 a month take home. She typed the subtraction into her phone and looked at what was left. Some months it would be positive by a few $100s. Some months it wouldn't. She stared at the cover letter and thought, I would be working 40 hours a week to net $200. She closed the document without saving it. She tore the cover letter page off the pad and set it aside. Not dramatically, just done with it, and turned to a clean sheet. At the top, she wrote in capital letters, I will not look for a job. I will build income. She drew a line under it, the way you do when you're not making a note, but making a rule. There was something clarifying about seeing it written down that she hadn't expected. It removed a category of decision from the next 6 months. She wouldn't weigh job offers. She wouldn't second-guess salary numbers. She wouldn't spend evenings on cover letters. The runway was fixed. The target was fixed. What she did with the time was the only variable left. She capped the pen and looked at the sentence for another 10 seconds. Then she flipped to a new page and started working. She gave herself 2 days in a single instruction. List everything she actually knew how to do. No filter, no judgment about whether it sounded impressive. Digital marketing strategy. Email campaign setup and copywriting. Canva, brand kits, social templates, presentation decks. Adobe Illustrator at an intermediate level. Social content calendars. Analytics reporting in Google and Meta dashboards. She wrote each one down in plain language and did not dress it up. By the end of the second morning, she had 11 items on the whiteboard in the home office nook, and she stood back and looked at them, the way you look at inventory before a move. This is what I have. This is what I'm working with. Now what is it worth? The question wasn't whether the skills were valuable. The question was to whom, in what form, and at what price. She spent the next 2 days researching what those skills were actually worth on the open market. Not what she felt they were worth, not what she'd been paid for adjacent work at a company, but what independent practitioners were charging right now. She opened freelance rate surveys, Reddit threads, and small business communities, positioning guides from marketing freelancers who published their pricing publicly. The numbers had a wide range, but the pattern was clear. Social media management ran $500 to $2,200 per month per client, depending on scope. Email marketing setup ran to the $2,000 a project. Brand identity starter kits, logo, palette, templates ran $400 to $700 as a one-off deliverable. She built a simple table: skill, market rate, hours required, effective hourly, repeat revenue potential. The column that mattered most was the last one. The math on retainers was what changed the shape of the plan. A single brand kit at $500 was good money for 2 days of focused work, but it was money she had to re-earn every time. A retainer at $750 a month was money that arrived without her having to sell again. 2 clients at $800 each was $1,600 before she'd sold a single one-off project. 2 clients at that rate plus 1 brand kit a month was $2,200. And the brand kit was nearly passive compared to finding a new client from scratch. She wrote the arithmetic out long, the way she used to show her work in school, because she wanted to be certain she wasn't rounding up on her own behalf. She wasn't. The model worked on paper. The only question remaining was whether it would work with actual human beings on the other end. She looked at every other option before she ruled them out, because she didn't want to dismiss something that might have worked. She downloaded 3 gig apps and modeled the hours. Delivery driving. She ran the net of mileage numbers and got to $11.40 an hour in her city after deductions. Fiverr logo work at entry-level pricing would mean competing against international designers charging $15 for a full brand kit, which would take her 20 hours to deliver properly. TaskRabbit errands paid by the job with no repeat relationship, no compounding, no way to build anything. The test she applied to each one was simple. Can this reach $2,000 a month without requiring more hours than I actually have? Every gig option failed that test. Not because gig work was beneath her, because the math wasn't there, and she'd promised herself she'd follow the math. The plan that emerged was not complicated, which she decided was a feature rather than a flaw. 2 anchor retainer clients at $800 each. That was the load-bearing structure. 1 brand kit sale per month at $400 to $500. That was the cushion and the proof that her one-off work could feed her retainer pipeline. Total, $2,000 to $2,100 per month, recurring, with a clear path to more without adding proportional hours. She wrote it in 3 columns on a fresh legal pad page: service type, price, timeline to close, and looked at it for a long moment. It was the kind of plan that looked obvious after you'd built it and took 2 weeks of hard thinking to arrive at. She photographed it with her phone so she'd have it if the page got buried under homework. Then she wrote month 1 at the top and drew an arrow. She gave herself 5 days to build the portfolio, which was almost not enough and exactly enough. The brief she set herself was deliberate. 3 fictional clients, 3 distinct industries, each one a complete brand kit, plus a sample deliverable. She invented a neighborhood bakery called Golden Hour, a fitness coach named Carla Voss, and a used bookshop called The Margin. She designed logos, chose color palettes, built 2 social templates for each, and wrote a sample email welcome sequence for the bakery. None of it was for a real client. All of it was real work. By night 4, she had 3 mock brand boards on screen that looked like she'd been doing this for 2 years, because in a sense she had, just not for herself. She exported everything to a shared drive folder and tagged each project with the skills it demonstrated. That folder became the backbone of everything that followed. Day 12 of the 6-month clock. She registered the business name with the state, opened a separate checking account at her credit union, $40 to open, a deliberate act, and hit publish on a 4-page Squarespace website she'd built over 3 evenings on the free trial. Home, services, portfolio, contact, nothing more, nothing less. The design was clean and the copy was honest, and the portfolio page showed the 3 mock brands in a grid that looked like evidence of work rather than a plea for it. She clicked the publish button, closed the laptop, and felt something she hadn't expected. Not relief, but readiness. She had a business. It had no clients yet. It had a website, a bank account, a legal name, and a portfolio. The clock was running. She had 5.5 months left. With a live website and size and a real business name, Maya moved to the part she had been dreading most, asking strangers for money. She opened a spreadsheet and built a list of 23 small local businesses, boutiques, wellness studios, real estate agents, filtering for anyone whose Instagram hadn't posted in 3 weeks or whose Facebook cover photo still said 2019. Each email took her 20 minutes to personalize. She referenced the specific business by name, noted something concrete about their current online presence, and kept the pitch to 4 sentences. She sent the last one at 6:15 in the morning, before the kids were up, and closed the laptop feeling like she had done something real. The clock was now at week 3. She had roughly 22 weeks left. The silence that followed was total. 1 day passed, then 3, then a full week, and the inbox showed nothing except a newsletter from Squarespace and a coupon for a grocery app. Maya refreshed the folder more times than she wanted to count. She told herself silence was normal, that small business owners were busy, that the emails probably landed in spam, but each rationalization had a half-life measured in hours. By day 8, she was sitting at the same table where she had written, "I will build income," in capital letters, wondering whether that sentence that had been arrogance dressed up as resolve. The fear had a specific texture. Not that she had failed, but that she had spent 2 weeks at building something the world had simply not noticed. On day 9, Maya went back to every unsent draft and read them the way a stranger would. She saw it immediately. Each email led with her services, her portfolio, her offer. It was all about what she needed, not what they had. She opened a blank document and rewrote the template from scratch. The new version had no pitch at all in the first paragraph. Instead, it named one specific, fixable problem she had spotted in their online presence: a missing link in a bio, an inconsistent logo across platforms, a posting gap right before a seasonal window, and offered a single concrete observation, free, with no ask attached. It was a harder email to write, because it required her to actually think about each business rather than find and replace a name. She sent revised versions to the same list before midnight. 48 hours later, 3 replies arrived inside the same afternoon. A yoga studio owner who said the observation about her inconsistent branding was embarrassingly accurate. A boutique clothing shop manager who asked if Maya could do a full audit. A solo real estate agent who said she had been meaning to fix exactly the thing Maya had pointed out for 6 months and never had. None of them were commitments. None of them were money. But they were doors that had been closed and were now open, and Maya understood in a way she hadn't before that the difference between silence and response was whether she had led with their problem or her solution. She wrote down that sentence in the notebook and underlined it twice. Then she replied to all 3 within the hour before the moment cooled. She scheduled all 3 discovery calls within the same week and approached each one the same way. She asked what the owner's biggest frustration was before she ever mentioned price, and she took notes in a live Google Doc rather than trying to hold it in her head. The yoga studio owner talked for 11 minutes before Maya said much at all. No consistent visual look, no time to manage it. A new competitor had just opened 3 blocks away. Maya heard the words "no time" and "no consistent look" and wrote them in the doc in caps because those were the exact words she would put back into the proposal. She ran the call from her home office with earbuds in and the door pulled almost shut, and at one point one of her kids knocked and she answered quietly and redirected without losing the thread. The call ended with the studio owner saying, "I feel like you actually get what I'm dealing with." Maya wrote the proposal for the yoga studio in one sitting. 3-month social management retainer, $750 per month, with a brand refresh starter kit included in month 1 to give the owner something tangible to hold at the start. She priced it below her ceiling deliberately. She wanted a signed contract more than she wanted to negotiate, and $750 recurring was $750 closer to the number on the legal pad. She attached the PDF to an email, wrote 4 sentences in the body, and hovered over the send button for a full minute. Not from doubt about the price, she had done that math 3 times, but from the specific weight of knowing this was the first real ask she had made of another human being in this entire process. She clicked send, closed the laptop, and walked to the kitchen to make the kids' lunch. because she had learned that refreshing the inbox immediately after sending was a tax she couldn't afford to pay. The reply came before the end of the day. The yoga studio owner said yes, asked for an invoice, and Maya sat down and realized she had never in her life generated a business invoice. She found Wave accounting software in a Google search, created a free account, and spent 30 minutes learning the interface and filling in the line items: service description, rate, due date, her business name in the header. It was one of the more unglamorous 30 minutes of the entire 6 months. Clicking through drop-down menus for a document that would exist for 2 minutes in someone's inbox before being forwarded to their bookkeeper, but she sent it, and it looked professional. And she did not apologize in the email for being new to this, because nobody had asked. The invoice was for $750. It was the most important document she had ever made in Canva. The $750 landed in the business bank account at the end of month 2. A bank notification on her phone at 7:43 p.m. on a Wednesday. Maya screenshot it, walked down the hall, and showed it to her husband without saying anything. He looked at the screen, looked at her, and exhaled the way people exhale when they have been holding something for weeks without naming it. They didn't celebrate, exactly. The kids were still up, and the number was a beginning, not an ending, and there was still a long way to the target. But for a few minutes, they stood in the bedroom doorway in the lamplight and let it mean something. Maya saved the screenshot in a folder on her phone she labeled proof. She would need it on the days when the pipeline went quiet and the doubt returned, which it would. She closed the boutique clothing shop as a second client the following week, a $600 per month retainer for social content and a monthly email, and entered both numbers into a tracking spreadsheet for the first time. 2 clients, $1,350 per month, recurring. She stared at the number and felt something that wasn't satisfaction exactly, but was close to it. The specific feeling of a plan that had left the page and entered the world. The target was 2,000. The gap was 6. She had roughly 14 weeks left on the clock, and she needed at least one more anchor client, possibly 2 smaller ones, to cross the line with any margin. She wrote 650 gap in her notebook and underlined it, not to frighten herself, but to make sure she didn't let the progress of the last few weeks trick her into thinking the work was done. The most direct path to a third client was not another cold outreach campaign. It was the 2 clients she already had. Maya drafted 2 short emails, one to each, thanking them for the first weeks of work and asking a single question. Did they know one other small business owner who might be dealing with the same marketing headaches? No pressure, no referral fee offered, just a direct ask from someone they already trusted. The emails each took less than 5 minutes to write. She sent them on a Tuesday morning and told herself the result was not in her control. Only the ask was. That distinction, she was finding, was the only way to keep moving without burning out. Separate what you can do from what you can't, do the thing and release the outcome. The pipeline would fill or it wouldn't. She had done her part. Month 3 ended with an unexpected source. A freelance photographer had found Maya's portfolio page through a Google search. She still doesn't know exactly which search, and emailed asking about a brand identity kit for a solo practice relaunch. No retainer, no monthly commitment, a one-time project, logo, color palette, 2 social templates, delivered in 10 days. Maya priced it at $450. The photographer agreed the same day, and the money cleared 2 weeks later. It wasn't recurring revenue. It wasn't the anchor she needed for the spreadsheet's empty third row. But when she added it to the 3-month total, $700 plus $600 plus the one-off, she reached $250 collected, and the model she had sketched on a legal pad in week 1 had now proven itself in the real world. The question was whether she could make it repeat. Month 4 began with silence from the client she could least afford to lose. The yoga studio owner missed a scheduled check-in call on a Monday morning. No cancellation, no reschedule, just a blank calendar slot where a call had been. Maya sent a follow-up email the same afternoon, no reply. She sent another on Wednesday. Still nothing. By the end of the first week, she had 3 unanswered messages in a thread that had previously moved fast. And the $750 retainer that anchored her entire model was now sitting in a column that felt increasingly theoretical. She kept working, posting the studio's content on schedule, drafting the next month's calendar, because stopping would have made the silence mean more than it already did. But she was aware, very specifically, that $750 of her $1,150 in monthly revenue was attached to a person who had stopped answering. She called instead of emailed, a simple decision that turned out to be the right one. The yoga studio owner picked up on the second ring, her voice tired but not hostile. She was overwhelmed, she said. The content felt like one more thing on a list that never got shorter. Maya listened without interrupting, and when the owner finished, Maya didn't defend the work. She asked one question: what would a lighter month look like for you? They redesigned the scope together on that call. Same price, less friction, and by the time they hung up, the retainer was intact. That conversation would become the template for every difficult client exchange that followed. But surviving the call wasn't the lesson. The lesson was everything the near miss exposed. No deposit clause, no late payment fee, no language in any agreement that required a client to give her 30 days notice before walking away. She had built the revenue on goodwill and momentum, and goodwill doesn't survive a bad quarter. That same night, after the kids were asleep, she opened her client agreement template and rewrote it from the ground up. 50% deposit required before any work began. Retainer fees billed 30 days in advance. A single-page document that was clear enough that neither side could misread it. She sent updated agreements to both clients before midnight. Both clients signed the updated agreement within 2 days, neither one asking a single question about the new terms. That absence of pushback told her something she hadn't expected. Clients don't resist structure. They resist uncertainty. The old arrangement had been informal precisely because she hadn't wanted to seem demanding. But the new terms read as professional, not aggressive. She filed both signed copies in a folder she labeled Foundation, because that's what it felt like. Not a patch on a wound, but an actual floor beneath the business. The near loss had given her something a smooth first month never would have. The mechanics of a business that could survive friction. Month 4 closed at $1,250 in retainer revenue, the same number it had opened at. No new client. The referral pipeline she'd hoped would generate a third anchor had gone quiet after the first warm reply fizzled on a second email. She sat on the living room couch that Sunday evening while the kids finished homework at the table behind her and looked at the tracker. 2 clients, solid contracts, not enough. The target was still $650 short, and there were 2 months left on the clock. She didn't panic, but she also didn't pretend the math was fine. She wrote 2 words in her notebook, lead gen, and drew a line under them the same way she had underlined her first decision 6 months ago. The consistent lead source she needed didn't require a new platform or a paid ad. It required one Tuesday morning every week. She started posting a single observation on LinkedIn. Something specific, something useful, nothing that asked for anything in return. Not, here's why you need a social media manager. More like, the reason your Instagram bio isn't converting is probably a 3-word fix. Here's what to look for. No pitch. No call to action beyond her name and title in the profile. She scheduled 8 posts in a row on a Sunday afternoon, 1 per week, and committed to shipping them whether or not anyone responded. The point wasn't engagement. The point was presence, week after week until the right person saw the right post. The third client didn't come from cold outreach. She came from a LinkedIn post on a Tuesday morning in week 6. A small event planning company, a solo operator named Dana, who managed corporate gatherings from a home office not unlike Maya's own. Dana's email was 3 sentences. She'd read the post, recognized her own problem in it, and wanted to know if Maya had availability. 1 discovery call, 1 proposal, 1 signed agreement 7 days later at $700 per month. The moment the confirmation email arrived, Maya sat down at the kitchen counter and read it twice before she let herself register what the number meant. $2,050 in recurring monthly revenue, with 2 weeks still left on the clock. With the revenue target crossed, the insurance question became administrative rather than existential. She ran the numbers on the marketplace plan, $680 per month for all 5 of them, covering the kids and her husband and herself, a premium that would have been impossible against 0 income and was now simply a line item. She spent a Tuesday afternoon on healthcare.gov comparing deductibles and provider networks the way she had spent an earlier afternoon comparing freelance rate surveys, methodically, without drama. She filed the enrollment paperwork before dinner. Nobody congratulated her for it. There was nothing cinematic about clicking through plan comparison screens at 4 in the afternoon, and that was exactly the point. This was the work, and the work looked like this. She wrote the email to her employer in 3 sentences. She did not explain herself, did not thank anyone for the opportunity, did not soften the language into ambiguity. She said she would not be seeking reinstatement, wished the team well, and closed. The cursor hovered over the send button for about 4 seconds, not out of doubt, but out of the recognition that this was a door, and doors make a sound when they close. She pressed send and closed the laptop. What surprised her was that the feeling that followed wasn't relief or triumph. It was something quieter, the specific calm of a decision that had already been made months ago finally catching up to its paperwork. Month 6 arrived on a Wednesday. The last paycheck from the old job cleared at 6 a.m. She checked it the way you check something you already know is there. The old insurance policy lapsed at midnight. The new marketplace plan activated the same morning. All 5 names listed, the coverage real. The transition she had spent 6 months engineering happened inside a single calendar day, invisible to everyone except her. She made coffee, got the kids ready for school, and sat at the kitchen table after they left. The deadline that had felt like a threat in month 1 had become, by the morning it arrived, simply the date when one version of the arrangement ended and another began. The 6-month trackers told the story in 6 rows. 0 recurring revenue at the start of month 1, $750 at the end of month 2, $1,350 through months 3 and 4, $2,050 by month 5 and held there at month 6. 3 clients under contract. 1 gig platform path rejected after a single afternoon of honest math. 1 near loss in month 4 that had produced better contracts than she would have written in a calm moment. 0 additional childcare cost. Every hour of work fit inside the hours that already existed. She had not worked more hours than she had. She had chosen differently what to do with them. She typed the lesson into her phone notes app on a Sunday afternoon while the kids were watching something in the other room. She didn't write it for anyone else. There was no audience, no post plan, no caption coming. She wrote, "The deadline was not the enemy. It was the only reason I moved fast enough to choose leverage over safety." She read it back once, scrolled to the top of the note, read it again. The 6 months had not been a story about hustle or inspiration or finding your passion. They had been a story about a constraint that forced a better decision than comfort ever would have. The pressure had been the point. The story was never about inspiration. Maya didn't find her passion. She found a gap between what the market paid and what her hours were worth, and she closed it before the deadline closed her. The figure who anchored every scene, at the desk at midnight, on the calls, reviewing the contracts, was never there to be admired. He was there because execution looks like a person in a room making a decision, and then making the next one. Every number in this story was reached through a choice that was available at the start and taken 6 months into a hard deadline. The only question that ever actually mattered was the same one Maya wrote at the top of that first legal pad page, and whether you are willing to write the line under it. By month 6, Maya had crossed her target, but the moment that actually saved her business happened in month 4 when a client ghosted her. What would you have done? Chased the money or walked away and rebuilt?